Warren Buffett recently purchased this FTSE 100 dividend stock. If you follow Warren Buffett's investing, you'll know that he doesn't, or should I say didn't, own any UK stocks. Warren Buffett actually purchased Diageo shares in 1991. He initially spent around $265 million on Diageo back when they were actually known as Guinness through his company Berkshire Hathaway. And around that time, he went on to say that our Guinness holding represents Berkshire's first significant investment in a company outside of the United States. And Guinness earns its money in much the same fashion as Coca-Cola. He then went on to increase his position in Diageo and actually ended up owning about 2% of the company. But he only held these shares for a few years before selling out of the position entirely, and since then, he has not actually had a UK position in his portfolio. Until very recently, when Berkshire Hathaway's latest 13F filings shows that the company now has a $42 million stake in Diageo again. If we look at Warren Buffett's Berkshire Hathaway holdings here, we can see that Diageo has recently been added. You can see that he's purchased 227,750 shares with a value of just over $42 million. And the crazy thing here is that even though he's purchased $42 million worth of a company, that company still makes up 0% of his entire portfolio. I think it makes up about 0.014%, but rounded 0%. That is insane. This just goes to show you the sheer size of Berkshire Hathaway. $42 million has been invested, and that makes up one of the smallest holdings inside the portfolio. So what is Diageo? Diageo is a British multinational alcoholic beverage company, and they produce and distribute a wide range of drinks that are really household names. Drinks like Guinness, Smirnoff and Captain Morgan. So Diageo is a UK FTSE 100 company, and it's actually a dividend paying company. They pay twice a year with a dividend yield of about 2.2%. But something that's really special about Diageo is it's considered a UK dividend aristocrat. This is a company that has been able to increase their dividends year on year on year for many, many consecutive years. And if we scroll down here, we start to get a picture of that. So this data goes back to 2006, and you can see the phenomenal ability of this company to just keep raising dividends and keep pumping more and more money back to the shareholders. So let's just take a look at how this company has been performing. So over the last 1 month, they've had a pretty good performance. 6 months, similar picture, up about 10%. Year to date, again, they're up. 1 year is not looking so good, however, which might play into why Warren Buffett has actually decided to purchase this stock right now. But we'll get onto that in a minute. 5 years, we start to see the real strength of this company, and 10 years, max it out. You can see how powerful this company is. But something I just wanted to show you whilst I'm using Seeking Alpha, which is the platform that I use for all of my stock analysis. I'll leave a link in the description if you want to check it out. But we can go to this financial tab here, and it shows us everything we need to know about the financial health of a company. And what you can see is that the revenue of Diageo has been increasing every single year since 2016. And let me just change this actually to British pounds so we can see it in the currency that the stock is in. Very, very powerful revenue growth, apart from in 2020. But that's not really surprising. This company, along with lots of other companies like itself, had a bit of a hit in revenue during the pandemic on its alcohol sales. Gross profit, same thing. You can see that the gross profit has been increasing again pretty much every single year, a little dip in 2020. But something else that I like to look at is the net income. And you can see that here. Again, a very similar picture. Increases every single year. Again, except 2020. But this is showing you how powerful this company is. Just another thing to quickly point out about this company is that the operating profits have been increasing as well. So we just saw that this company has been performing really, really well. It's clearly a strong company. But we also saw that in 2020, during the pandemic, they didn't do so well. Their gross profit went down, their net income went down, and revenue went down as well. So you might ask yourself, if a recession is on its way, then why would this be a good company to invest into when maybe they don't perform so well during those economic hardships? Well, actually, alcohol stocks in general are considered pretty defensive. They are considered stocks that can weather the storm, which means that when times get tough, the bottom line of these companies, of Diageo, doesn't tend to get hit quite as hard as the bottom line of other companies in other sectors. And clearly, Warren Buffett either thinks, one, there's not going to be a true recession, or two, this company is still worth buying and it will be able to stand strong and come out the other side of a recession. Now, thinking about Warren Buffett actually deciding to purchase Diageo, it makes complete sense. This is such a typical stock that he likes to have in his portfolio. He's had it before and he's reintroduced it. The business is quite easy to understand. It's clear what products they sell, it's clear what sector they fall into. It's just a very understandable business, and that is something that Warren really likes. On top of this, it operates in markets where the demand is fairly consistent and fairly stable. It has so many different products as well, meaning that it has an economic moat. It's very unlikely that a company will be able to start now and compete directly with the strength of Diageo. It has a competitive advantage and a true economic moat. Again, things very important for Warren Buffett. And also, we know in the UK how powerful these brands are. They are household names. Everyone knows them and everyone loves them. And the brands that Diageo has are incredibly strong and powerful brands. You could walk up to pretty much anyone globally or in the UK and name some of these brands that Diageo has, and it's so unlikely that they won't know what you're talking about. And what does this mean? Well, this means that people keep buying these products. They're loyal to these brand names. And that means that Diageo are allowed to price their products as they see fit. The company is able to maintain profit margins because what they can do is they can increase prices and pass them extra costs onto the consumer. And most likely the consumer will still pay for them. It's a bit like Coca-Cola. People prefer Coca-Cola than knockoff brands, and that just comes down to brand loyalty. And I believe Warren Buffett will also really like the fact that the revenue of this company is coming across the world. I think it's like 180 companies that Diageo is able to pull revenue from. Global company, brand loyalty, all these other factors considered, I am not surprised that he wants this one in his portfolio. And also, like we saw, the 1 year performance of Diageo is down. This could mean that he is thinking that this company is currently undervalued. Warren Buffett is a value investor after all. He likes to buy companies when he sees them undervalued. Then he likes to hold on to them, allow the share price to go up, and that's where he makes a lot of his money. So potentially, he thinks this company is a very good opportunity right now. But having said that, it's clear that this is a very small position for him, which probably means that he's not overly bullish on Diageo, or he doesn't think it's an incredible price just yet. But it will be really interesting to see if he carries on adding to this position. Let me know, do you have Diageo in your own portfolio?